Many of you have asked me to do another update on Estee Lauder stock, ticker symbol EL. It's now sitting at $113 per share. In my previous video, I said that the stock looks pretty much fairly valued around $120, $125 per share. Well, now it's sitting at $113 per share after the company slashed the guidance by something like 35% or 40%. I mean, it's been absolutely insane. So I have to do another video to revise my own valuation model and tell you what is my fair value right now on Estee Lauder. And this is when a lot of people get mad. They told me, but you said it was a buy at this price and now you're lowering your price so you can avoid being wrong. This is not true. Whenever you have a company slashing guidance by 40%, and whenever you have a company with their net income down 90%, I mean, you have to somehow change your mind or revise your own outlook whenever the facts change. So this is why I'm doing this video. Now, most of you are familiar with Estee Lauder stock, or the company. They own pretty popular brands like MAC, makeup for women, and all these kind of things. Most of you are familiar with the brand. I'm not going to waste your time on it very much. But if we look at their latest report, it's been a disaster. Pretty much every single report. I mean, it's been crazy. I'm trying to find anything good within these reports, and they keep, kind of trying to push it out to 2025 or 2026 profitability. Maybe next year is going to be 2027. It's been crazy. But the net sales have been down over 10%. Organic sales declined 11%, and they lowered the full year outlook by something like 34 or 35%. So on the surface, nothing looks interesting at all. If we look in a little bit deeper, I mean, it's been crazy. Look at the gross profits. Gross profit is down 16%, while operating expenses are up 5%. I mean, why? Like, why? I just don't understand how this is happening. How Estee Lauder got so mismanaged. I mean, gross profits down 16%, but operating expenses should be down a little bit, but they are up around 5%. Operating income is down 85%. I mean, 85%, absolutely. And there's no improvements quarter over quarter. It's even worse quarter over quarter. But year over year, it's around 85%. And you look at net income in general, net earnings, is down 93% to only $36 million for a company like Estee Lauder. I mean, absolutely insane. I don't know how this happened, how it got so mismanaged, but some things are out of their control. And something that's been out of their control is mainly the China recovery. And this is what the CFO said. They said that the travel retail, which is a duty-free shopping primarily in airports, made up to 40% of Estee Lauder's sales to Chinese customers before the COVID-19 pandemic. And after that, it has recovered more slowly than the company expected, as China is lagging behind the rest of the world in easing travel curbs and restrictions, and they don't expect it to get back to what it was pre-COVID. But they expect Chinese customers to shop more often within mainland China rather than at airports and other things, which made over 40% of their revenues. So some things are out of their control, but I believe cost cutting should be within their control. But I'm not seeing it happening with Estee Lauder. They said that their plan is between 2025 to 2026. I mean, I'm not seeing how this is going to happen. They keep pushing it away. I'm not seeing any improvements. I would be more encouraged if I see some improvements quarter over quarter, but I'm not seeing anything yet. Maybe next quarter could be a little bit better, but for the guidance, they expect EPS 217 to 242 versus their previous estimate when I made my video, 350 to 375. So of course I have to make a video and change my mind and maybe be a little bit more bearish on something like Estee Lauder, but the stock did price in enough bad news. I mean, it went down like 17 or 18% in the after hours. Today it's up over 8%, so it's recovering a little bit. It's been oversold. This is pretty normal, but I'm gonna more pay attention to the fundamentals to try to determine a fair value on Estee Lauder. And this is a very hard stock to value because we don't know how their margins are gonna look like after the plan is done by 2026. We don't know the profitability, how it's gonna look like. We don't know how much revenue growth they're gonna experience. We don't know what China does in regulations. So this is a very hard stock to value, but I did my best to do it in the video. I use their own guidance for 2024, which is 1.5% growth. This is pretty much flat. I put in 2%. For 2025 to 2028, over the next 4 years after 2024, I put in 7% average revenue growth, which is in line with the analyst estimates. They have them between 7% to 9%. I'm not sure if they can hit it, but they should be able to. So I just put in 7%, which is I'm not certain of. It's hard to be certain of anything with such companies, but this is, I believe, is some kind of a fair growth number of 7%. Net income margin is very tricky because net income margin has pretty much plummeted recently to around 6.2%. I mean, it's very, very low. Now, on the COVID highs, it was around 14%. And before that, the historical average for something like Estee Lauder was around 10 to 11%. Now, the analysts, they are expecting Estee Lauder to get back to pre-COVID levels of around 10.5% after their restructuring and cost-cutting plan is done by 2026. And I believe this is fair, so I personally used a 10% net income margin. I'm not going to bet on 14% or 13%. I think this is too optimistic. I think 10.5% to 10% is fair, so I use 10%. For a PE ratio, I'm going to use a few different ones. It's a little bit tricky. But on the PE ratio, now Estee Lauder is trading at a pretty good level, around 24.5 times 2025 EPS per share, which now, because we're entering fiscal year 2024, so they're using 2025, which I'm not sure if this is the best thing to use. But on 2025, we're trading around 24.5 times pretty much normalized earnings. This is lower than it traded at the COVID low, very well within the historical average, below the historical average. The historical mean was around 32 times earnings for the company that used to grow 10% with high margins. But now I'm seeing 24.5%. And I just used the same exact one, but then I'm going to use a few different ones later on in the video. By using the 25 times earnings, which I believe is fair, and their 2% dividend, I only got 43% on the upside, or 7.5% CAGR. Now, if I want to double my money on Estee Lauder with these estimates, I would have to buy the stock around $79 per share. Now, I want you to calm down a little bit, because if I use the mean, the historical average of 32 times, which I'm not betting on, I wouldn't bet on it. I would bet on the base to worst case scenario, never on the best case scenario. But if I want to bet on the historical average of 32 times, then the upside from here is over 81%, or 12.6% CAGR over the next 5 years, which is not bad at all. Now, in this case, if I want to double my money with Estee Lauder, I would have to buy it at $100 per share pretty much, which is not far from where it is, like 10% lower or 15% lower. You could get below $100. But for me personally, I would feel much more comfortable using 25 times earnings to be conservative with Estee Lauder. That would give me $79 per share on some kind of a worst case scenario. The best case scenario, in my opinion, is $100 per share to get it double. Now, there's no guarantee that a high-quality company like Estee Lauder is ever going to get to fair value. Some of these stocks always trade a little bit at a premium to their fair valuation. So if you're a very long-term investor, I mean, the stock does not look too bad here. There could be a lot of potential if they surprise to the upside with profitability, if China eases restrictions and people travel again and all these kind of things, like what used to happen pre-COVID. This is very possible, but I wouldn't count on it. So for me personally, anywhere around $80, $85, or even $90 would start to look extremely interesting to me for Estee Lauder. But with everything that's happening in the market, a lot of other stocks are down, and I personally believe I can get the same upside potential or a little bit higher with much less uncertainty and risk with different investments. So this was my honest opinion on Estee Lauder. I think it looks much better than it did before. But again, it's just I had to revise my estimate because they slashed guidance. So the numbers are much lower. So I think 80 to 85 would be an amazing buying opportunity if we ever get there. So this was my video. It was not financial advice. Thank you very much for watching it. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.